Today, I will introduce the history of trusts and the main types of trusts in Japan from 1945 to 1960, that is, a period of post-war recovery to high economic growth. First, from 1945 to early 1960. Japan quickly and dramatically recovered from the devastation of World War II. These photos show the situation of Japan at the final phase of World War II around 1945, and the Tokaido bullet train opened up in 1964. Please let me explain about loan trusts, pension trusts, and other trusts that contributed to the so-called miracle recovery and high economic growth in Japan after the war. World War II was over in August 1945. Manufacturing facilities in Japan were devastated by air raids at the final phase of the war. To promote economic recovery, coal, steel, electricity, and fertilizer industries were prioritized. Funds, materials, and the labor force were preferentially allocated to these industries. In 1948, relevant laws enabled a trust company to run banking business concurrently. Here, trust companies had a new start as trust banks. In 1952, loan trusts were created. Loan trusts aimed to raise long-term savings from people in order to supply funds to basic industries which were expected to play important roles in the economic recovery. Loan trusts became popular since it was possible to make a contract with small amounts of money. Dividends were treated favorably for tax purposes like deposits. Together with these good points, the phrase, safe with principal compensation, good deal with high dividends, and convenient bearer beneficiary securities attracted people. This is an advertisement of the first public offering for loan trusts of the Sumitomo Trust and Banking Corporation in 1952. The advertisement said that it is the most reliable and the best. Expected dividend rates for a 5-year course is 9.5% per year. It is also stated that there is no tax up to 100,000 Japanese yen. In 1948, the Securities and Exchange Act was enacted. In 1949, the Tokyo Stock Exchange was established and stock trading was resumed. In 1951, the Securities Investment Trust was set up by the enactment of the Securities Investment Trust Act. After World War II, family-run giant business groups, zaibatsu, were dismantled and a volume of stocks occupied by the zaibatsu were put in a market. A purpose of the series of law and system reforms mentioned just now was to democratize securities, that is, to have people, not zaibatsu, invest in stocks and promote the stock market. In the case of securities investment trusts, an investment trust management company gives instructions to a trust bank on how to manage and invest trust property. The trust bank manages and invests the property as a trustee according to the instructions. Various changes have been made to security investment trusts in response to changes in society and economy. For example, to set up security investment corporation systems, to start non-public offering investment trust services, to include real estate and monetary claim as targets of investment in addition to securities, to introduce exchange-traded funds, ETFs, JREITs, and so on. Due to these new developments, balance of securities investment trusts have been increasing. This is a sample of beneficiary securities of securities investment trusts around 1950. In the 1950s, the era of high growth began in Japan. It started with the war boom of the Korean War in the early 1950s, and then a series of economy booms followed. The Economic White Paper in 1956 states that it is no longer post-war and that growth through recovery is over. Future growth will be supported by modernization. New industries and new products emerged in the influence of rapid technological innovations. Various investment to promote modernization closely related to each other. At that time, one investment generated another investment, driving high economy growth. Loan trusts expanded rapidly to meet growing demand of long-term corporate financing. In 1956, the offering of movable property trusts began. In 1958, as one of the businesses of a trust bank, securities agency business, which handles affairs related to stocks on behalf of stock companies, started. The romance car, operated by Odakyu Electric Railway. This is the first case of movable property trusts of Sumitomo Trust and Banking in 1957. To use movable property trusts, a company puts transportation equipments, machineries, and other various properties in trust, and then sells beneficiary rights to investors to raise funds. Again, back to loan trusts. I will explain the characteristics of loan trusts. This is one of the joint management designated money trusts. It includes principal compensation and specifies expected dividend rates. Initially, targets of investments were mostly limited to key industries such as steel, coal, shipping, and electric power, but later expanded to other industries to reflect change of industry structure. Further, securities management was also permitted under certain conditions. Loan trusts had grown as a flagship service of trust banks. In 1981, offering BIG, providing profits to customers at maturity, was started. Thanks to contribution of BIG, balance of loan trusts went above 50 trillion yen in the early 1990s. This is a pamphlet of BIG in the 1980s. It says powerful about 1.5 times. 1.5 times in 5 years was a catchphrase at that time. However, since 2000, the service of loan trusts shrank and is now discontinued. Reasons are as follows. The demand of long-term corporate financing declined as the economy matured. It became difficult to differentiate from fixed-term deposits as financial liberalization progressed. Unlike deposits, it was not flexible. For example, to set interest rates case by case was not allowed. It became difficult to proceed ALM, asset liability management, of 12 investment funds in progress of disposal of the non-performing claims after the bubble economy burst around 1990. Risk weight of BIS was raised, and burden of service maintenance and management, and so on. This slide shows examples of various joint management designated money trusts and adjustable rate deposits of the Sumitomo Trust Banking. Around 2000, to address shrinking demand for loan trusts, new types of services like performance-based dividend joint management designated money trusts and variable rate or fixed rate fixed-term deposits were developed. This is a pamphlet of Triple of Sumitomo Trust Banking. This is the first variable rate deposit offered by a trust bank. Sales point of Triple was safe, advantageous, and convenient. Triple was convenient because it provided a considerable amount of interest, even though a customer canceled before maturity. That means a customer canceled deposit contract to get cash without hesitation when he or she needed money. Next, Good Select of Sumitomo Trust Banking. It's a new type of fixed-term deposit. As the same with loan trusts, the bank held funds long-term and set relatively high levels of interest. Let's move on to the 1960s. The 1960s were a period of high economic growth. Under the income doubling plan promoted by Ikeda Hayato cabinet, income and consumption level increased, consumption spending kept going up, and rapid economic growth continued, backed by vigorous capital investment. In 1964, the construction of the bullet train was completed, and we hosted the Tokyo Olympics successfully. After these events, securities recession, symbolized by financial crises of the Yamaichi Security Company Limited, happened in the middle of 1960. However, in 1965, again the economic boom began and lasted for a long time. The GNP of Japan went up to the second largest in the world, just behind the USA in 1968. The average annual growth rate throughout the 1960s was a high rate of 10.4%. Income level increased dramatically. Black and white televisions, electric washing machines, and electric refrigerators became widespread. This is a photograph of the first Ikeda cabinet in 1960. The Ikeda cabinet announced the income doubling plan, which aimed to double the income of people in 10 years from 1961. Actually, the economy was growing more rapidly than expected, and the income doubled in around 7 years. This is the opening ceremony of the Tokyo Olympics on October 10, 1964. The total cost for the Olympics, including construction cost of the Tokaido bullet train and the Metropolitan Expressway, was 1 trillion Japanese yen, 1/3 of the national budget. It is sometimes called the 1 trillion Olympics. The economy of Japan temporarily fell into stagnation in early 1960. However, the Olympics boosted economic gain. In the 1960s, the domestic labor market faced a labor force shortage. At this time, the importance of corporate pensions to take care of life securities of retired employees was highlighted. As one of the solutions, a qualified retirement pension trust with tax preferential treatment was established. In 1967, an adjusted pension trust was established. Adjusted pension trusts is a semi-private system which allows private corporate pensions to take a role as public employee pension. In 1969, employee stock ownership trusts also launched. This is one example of qualified retirement pension trusts by Sumitomo Trust Banking. Qualified retirement pension trusts met some conditions under tax law. For example, to accumulate pension funds in third-party institutions, and so was permitted by National Tax Agency to treat premiums paid by a company as a loss. And investment incomes were treated non-taxable under tax law. Next, here's an example of employee stock ownership trust. When using employee stock ownership trust, an employee stockholding association of a company accumulates assets and places them in a trust, and the trust bank purchases stocks of this company on behalf of the association. This helps employees build savings, and at the same time helps companies have stable stockholders. Next, corporate pension trusts. When using corporate pension trusts, a company places assets accumulated to pay pensions or lump sum payments for employees in a trust, and a trust bank manages and invests the assets for the company. A company can rely on quality investment and management skills of a trust bank, an expert of investment. Further, trust property are secured in case a company goes bankrupt. Some system changes have been made since the start of this trust, and 3 types of corporate pension trusts are currently provided: the Employees Pension Fund Trust, Defined Benefit Corporate Pension Trust, and Corporate Defined Contribution Pension Trust. Finally, please let me introduce a trust law scholar, Dr. Kazuo Shinomiya's message about the idea of trusts. Trust can be set up for any purpose, as long as its purpose is not illegal or impossible. Therefore, there can be numerous cases of trusts. If there is anything that limits the possibility of trusts, it is nothing less than the lack of creativity of law experts and practitioners. I hope you will learn trusts and consider how to use trusts with your creativity.